in for a midweek check-in and take us to the ballot here. The Chief Global Investment Strategist, Charles Schwab, also keeping an eye on domestic events too. Jeff, good to see you twice in a week. No complaints from me, sir. Jerome Powell, anything to offer to Congress this week?
You know, I think it's interesting what he's been saying, which isn't really incrementally newsworthy. It's just that he's noting maybe an increased balance of risks, right? Inflation, sure, on the upside, like to see that come down a little bit, but also noting there's potential weakness in the labor market. That's softening up a little bit. The economy is slowing down. So a little bit more of a balance of risks to keeping rates where they are now. I think one of the things that's interesting here is maybe what it means for the international picture. So Japan is the biggest weight in the EFI index. So the yen matters to international investors, and the yen is in the hands of the Fed much more than the BOJ. And I think what's interesting right now, the dollar was weaker, the yen was a bit stronger. The market-based odds of a Fed rate cut in September are now at 75%. The odds of a rate hike by the Bank of Japan by September are nearly 100%. And that could mean the yen might begin to strengthen during Q3 from the weakest level since 1986, finally begin to reward some of those investors in overseas assets.
Okay. And we were talking a little bit about some of the themes that align with your ballpark earlier in the show. We were talking the U.S. deficits and reasons to look at countries that might have less of a burden going forward. We also got some international stock picks. As far as the yen and the Bank of Japan go, since we're thinking about inflation, that's kind of the one that I keep hearing folks kind of go to as like, all right, the biggest place for potential like mean reversion. So what are we looking for here in the short term?
So, I mean, let's just step back and think about mean reversion for a second. Yeah. So, the Citigroup Economic Surprise Index turned negative in the second quarter, meaning U.S. economic data went from surprising on the upside at the beginning of the quarter to surprising on the downside in the second half of the quarter. Now, that was good news in terms of the market because they wanted some weaker economic news because it made it more likely we're going to get Fed rate cuts later this year. But now that the market's pricing in a pretty high probability of at least 2 rate cuts later this year, is more weak economic news good or bad as we get into Q3? Well, it may be bad news. And so if I look at that and step back a little bit, I think we're on a decelerating trajectory in the U.S. Where we're seeing an upside in terms of economic trajectory, well, India and also Japan. People don't know this. Japan in the second quarter, economic growth likely came in at 2.2%. That's faster than in the U.S. So, we're seeing some more momentum there in terms of economic growth and earnings surprising on the upside. That could be good news in Q3.
Okay. All right. Like that. The other kind of the potential for upside surprises, it'd be lovely if we got those here in the U.S. I do hear kind of more, and again, to come back to our guest from Blue Zone at the top of the show, that they're looking for upside surprises more easy to come by in Europe. Does that resonate with you?
Yeah, I mean, expectations have been very low, and so it's easy to beat on the upside. Earnings revisions have been on the upside, so we're seeing earnings move higher here relative to the U.S., where earnings revisions have kind of been moving sideways for many months now. So that's good news, but we know that there's risk tied to the fallout from the elections that we've just seen, and that creates a little bit of uncertainty there, and we've certainly seen that in valuations. But you're still looking at some pretty attractive levels, some pessimism priced into those markets. I note here, just looking at Japan here, as I was talking before, this orange line going up is in dollars earnings expectations for 2024 for companies in the MSCI Japan Index. The blue line's the S&P 500. So earnings for the overall S&P 500 kind of stalling out, certainly still good year-over-year growth, but kind of not really making any further progress in terms of additional revisions. Maybe we get some as companies report this earnings season, but for the most part, there's a real difference here between the upward momentum to what we're seeing in Japan and the sideways momentum to earnings in the U.S. So I really like what I'm seeing in terms of upward revisions and increasing confidence in the global economic outlook relative to that of the U.S.
And the PPI number as well as the CPI number we got from China. We got PPI from Japan overnight, but both those, I mean, the whole region, Asia basically is like, it's literally like a different world in terms of inflation right now.
Yeah, it really is. They want it, and they're finally starting to get some of it. At least in Japan, that's been the case. And, the latest round of wage negotiations seem to support that. And that, again, plays into that idea that the Bank of Japan may be on the path to hiking rates maybe as soon as July, maybe as soon as the next meeting. So that could be good news again for the yen. It could use it. It's the lowest it's been since 1986.
All right, nice. Okay, always love a couple of Kleintop charts for us right before the bell. Thanks, Jeff.